Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Monday, December 20th, 2010. Well, it's been a pretty volatile intraday period today. Initially, the markets gapped higher, sold off all the way down to a key trend line we will discuss shortly, but then a move back up has taken us back to the highs of the day. And again, no one should be surprised if the markets go higher or go back to the highs of the day. I said that when we were at the lows of the day because the Federal Reserve will continue to prop this market up, folks. It's going to be a non-event. In other words, they will not allow this market to fall as long as there's no extracurricular affairs in Europe or in Asia. That is so important to remember because remember, those are the things that the market cannot or the Federal Reserve cannot control. But as long as things remain quiet, they will stick it out, keep things solid, and again continue to keep this market neutral to positive until the new year into January. All right now the Dow is down 14 points while the Nasdaq is up 9, S&P 500 is up 3 points on the day. Now I'm going to cover a couple different things today. There're going to be certain small caps I want to highlight to you today that I think are on the verge of breaking out based on sympathy plays to certain stocks. That I think will be a very good thing and a very great thing to see. In addition, I think it's also important to recognize some of the larger stocks that are underperforming today and overperforming today. But first off, let's talk about the levels on an intraday basis. Over the weekend, there was a little worry over North Korea, South Korea, as South Korea was going to do a live firing event. North Korea initially threatened. The futures last night were down a little bit ahead of that, but nothing ended up happening, and that's really why the market gapped up today. The dollar then pushed higher, and that's really the key about today, folks. Initially, you had the dollar flat on the day. The markets gapped up on relief over South Korea. Then the dollar started to move higher. As it moved higher, the market sold off, coming down into this key line. Take a look, connect the low pivot from Thursday to the low pivot on Friday right down here, and it goes to the exact low today on the charts. So again, notice the charts telling you the key levels to watch, where to be prepared to see a bounce, and again, that's a beautiful thing. All right, then what we saw is the dollar start to back off and volume get lighter and lighter. Please note as I zoom in here, look at how dead this volume is today, folks. It is absolutely non-existent. That's a positive for the markets. Whenever you have light volume, it means the general prognosis of the average investor is out there. The trading programs, black box trading programs, are just going back and forth. The only offsetting factor there is the average investor, which remember is positive. Human nature is to be positive. If you're not positive and you're depressed, meaning you're negative, they medicate you. So the market is a basic barometer of the human psychology. And in terms of known events out there, meaning nothing big going on, the markets will generally have a flat, light volume day. Light volume dictates neutral to upside bias. It's the keys we've continued to impress upon our members in the Research Center, and that's the way it's going to continue to be in our estimation. All right, so again, resistance right up here, folks. You're just above the 200 consolidating in a bullish manner. That means a good possibility you're going to pop up into this tie of the day. And if you go higher than that, your next spot will be upwards of 123.85 and then ultimately 124.95 or so, and then above the 125 level back to the 52-week highs at 125 and a quarter. All right, so that's what we're seeing right now on an intraday basis. If we quickly go to your intraday 60-minute chart, you can see again, you fluttered off the highs. You had a little M pattern with a small A that played out over the late last week. We saw some selling early in the week, and then late in the week, we moved back up a little bit. But for the most part, it was a neutral week last week. This week is starting off on a slightly positive note. Well, kind of mixed, but again, with the light volume, you probably anticipate as long as nothing happens in Europe or in Asia, the markets to be neutral to positive going into the end of this week. All right. Other than that, I quickly want to show you the dollar and just show you the kind of the action that we saw. Remember the market I showed you on an intraday SPY chart just a little while ago that the market sold off for the first 30 to 1 hour of the day. Look at what the dollar was doing, a high spike up. Now the dollar has slowly come off those highs. The market has rebounded. Now, why has the market rebounded more than the overall dollar has fallen? Because the light volume has that extra effect on it where you just need a small neutral or a small pullback in the dollar and the markets can really shoot back up because the light volume effect is working. It all makes sense, folks. You just have to study it and understand it. It doesn't take that much to understand it. We really cover it in the basics in the Research Center, and again, that's $49.99 a month. It includes everything, including nightly videos. I personally do 30 to 40 minutes in length of hardcore analysis. All right, now let's cover a couple different stocks in play today. Let's go back to the Spiders intraday, and you can see we're just about at the highs of the day on the SPY. Today, some stocks moving. Let's start with large caps. Large caps today, the financials have been strong all day. You can see Goldman Sachs has been up, essentially gapping initially down, but surging quickly to the positive side, continuing up even when the market was selling off for the first hour. Goldman Sachs was surging to the upside. That was the first little indicator they were probably going to keep this market up if you didn't know already based on our methodology. Next up, you have JP Morgan. Look at that. Same chart. Gap up has continued higher all day. That's keeping this market propped up. One of the key stock moves today that we called out was DANG at a low break of 23. There's your buying opportunity down there. We covered this in the intraday stock chat. It's bounced about 75 cents back. This is actually an IPO in China from about 2 weeks ago, and the stock again coming below the debut price. That was the signal to buy, letting it go down to a break of 23 and the bounce back close to 24 here towards the highs of the midday early afternoon session. Now, a couple small caps in play, folks. CPSL China Precision Steel and GSI General Steel Holdings are two China key plays here. Now, why are they important? Let's go back to the charts. Well, first of all, you like the consolidation here. It's made a nice little base, and it's hovering near the lows of the chart, recent chart. If we zoom out, you can see it was all the way up at 270 and change. It's now hovering in the lower ranges. That's a very, very solid chart. GSI up 2 cents today, right now holding at 245. It still has about 27,000 or so on the offer. To clear, I like this pullback, low level. Look at this little support area right down here. It's holding that nicely. Now, the key is this on these on these steel plays in China, why I like them into the afternoon session. All right, the answer is this. Take a look at U.S. Steel on the daily chart. Look at that chart. All right, and you can see the move up from $40 to $60 almost in a matter of a month or two. The steel stocks, the U.S. steel stocks have gone parabolic. You got to believe in the gut, at least I believe in the gut, that some of these China small caps that are at the lows of the chart like GSI or CPSL could get moves up in recent times. Now, again, you're looking for 10, 20% moves here on the back of this big moves. You wouldn't want to look for too much more than that. But that amount of move should be likely, in my opinion, on some of these other plays in the China steel area. And again, it makes sense. It's what I call a sympathy play. You have a U.S. steel company doing this, and even if we look at AK Steel, take a look at AK Steel, same general move up, and then you look at a couple China steel plays like GSI, low end of the chart, had just popped all the way to about 275, has come back into 245, and again, if you zoom out, you can see the stock was much, much higher earlier in the year or going back to late last year. So it's at the low end, and again, you're looking for that to pop up. At least I am. I think that has a decent chance. One of my higher plays here that I like going into this period here in the afternoon session. And really for the next couple weeks into January, I think these plays are good as long as the commodities stay strong and the market doesn't collapse. If that doesn't happen, these steel plays probably do turn up the heat and move up decently. And again, you're not looking for blockbuster 50 to 100% trades here. You're looking for 20, 25% max or so. And then you want to be smart and start taking some profits off the table. All right? So that's what we're seeing right now on those plays. Visa, again, up 67 cents after that big drop off of fear that the Federal Reserve will clamp down on the fees that they're allowed to charge. MasterCard is bouncing a little bit today, but you can see the ginormous drop as well on this, and we'll watch again and see how it all plays out. All right, I think that's about it for today, folks. Again, come join the Research Center or the Intraday Stock Chat. There are plays literally being posted every single day. We've been on a hot streak of late over the last 6 weeks or so, knocking, I'd say, about 90 to 95% of the trades out of the ballpark for major home runs. And again, that's what we try to do, 80 to 90% success rate time and time again, and we hold to that. Take care. Come join the Research Center. Come join the chat room. I will talk to you all later.